Hello and welcome. You're watching Markets Today. I'm Sakshi Batra and I'm going to help you understand how the markets have opened today and what kind of a trade can you expect on the last trading session of this budget week that we have seen an entire week full of volatility. The first 3 days full of gains, and yesterday we did see the budget rally really fizzle out. Well, today also we have seen a flattish opening on the D street, and the markets were quick to actually slip into the red as well. Not just the benchmarks, the Sensex and the Nifty, but also the Nifty Bank, the broader markets. There is an all across kind of a dip that you can see in the early trading action, and that's following the kind of mixed cues that we've been seeing all across the globe. Wall Street overnight closed with sharp losses. Asian markets opened mixed and had been giving mixed signals to the Indian markets, but the SGX Nifty was also indicating a flattish to a negative start, and that's exactly what we have witnessed today. When you talk about the Sensex, it was down about 41 points at 9:15 at open today at 58,746. The Nifty was down 20.2% or 20 points as well at about 17,560. About 1299 shares in the opening action are seen to be advancing. 543 shares, on the other hand, were seen to be declining, and the 89 shares remained unchanged at the early trading action. Now, what are the factors that are weighing on the street and the sentiments across the globe, including Indian markets? Well, in the Indian markets, it's the FIIs that have not been contributing to the market so far. We have been seeing them on a selling spree. In fact, in yesterday's trading session, both the FIIs and DIIs sold in trade. About 1597 crore rupees worth of shares were sold by FIIs yesterday. DIIs also offloaded shares about 370 odd crore rupees in the Indian equity markets on February 3rd. And this is also a factor to be considered while the negative sentiments are to be seen. Of course, the Wall Street, the sharp declines being seen there after the Meta, shares, or the Facebook companies' shares declined after the results posting, and also dragged the Nasdaq about 4% as well. So that's the kind of cues that we were getting from across the globe, and the macro cues were also not supportive. The oil prices kept on rising as well. We did see oil prices climb above the $90 a barrel mark for the first time since 2014. So that's a bit of a concern right now. Talk about the Brent crude, it was up 16 cents, 0.2% at $91.27 a barrel. And the WTI crude also rose about 28 cents or 0.3% to $90.55 a barrel as well. And this is for the first time since October 6th of 2014 that the $90 a barrel mark has been breached on the upside by the crude oil prices. Remember, that's a negative for the Indian markets too, or seen as a negative because we are an oil importing nation as well. Of course, apart from that, a whole host of focus today will remain on how different stocks react to their results, because the markets are really concentrating on stock specific movement right now as well. Let's talk about how the sectoral action is going on right now. In terms of IT, Realty indices, which have been a clear laggard in the last few trading sessions too, especially the IT index, that's taking it hard and is down 1% again. Some buying is being witnessed in the metal and power names, but other than that, most of the sectors are also trading quite subdued. Mid and small cap indices are also trading flat after losing about half to 1% in trade in yesterday's action as well. In terms of specific stocks, it's ONGC, ITC, Titan, Tata Consumer Products, and Britannia as the top gainers on the Nifty. Most of these stocks are reacting to the positive results that have been reported as well. On the other hand, losing side, we do see Infosys, TCS, Wipro, HCL Tech, so big IT names really dragging the street, and Reliance Industries is also seeing some sharp cuts coming in. Apart from this, of course, the focus today will be on ITC and how it continues to react. Remember, the earnings have been reported. The country's largest cigarette manufacturer and the FMCG major has reported a standalone profit of 4,156 odd crore rupees for the December quarter. That's up by 12.7%, as against 3,687 crore rupees reported in the year ago period of the same quarter. Now, remember, the ITC stock was already up in the last 2 or 3 odd trading sessions right during the budget, because no negative surprises or shocks were announced in terms of taxation on tobacco. That's a bit of a positive, and the results have definitely supported the gains too. Now, coming on to the kind of results that you will be witnessing today. Tata Steel, Shree Cement, Bank of India, Interglobe Aviation, 197 Communications, Siemens, Aditya Birla Fashion, Alchem Laboratories, Astral, as well as CMS Info Systems, City Union Bank, Devyani International, which is the operator of KFCs and Pizza Hut as well, Godrej Agrovet, Jubilant Pharma, and also Mahindra Lifespace Developers, Minda Corporation, Monte Carlo Fashions, REC, Sun Pharma, Advanced Research Company, Thermax, Vadilal Industries, and Zealand will be the other companies that will be coming out with their results today. How the macro numbers really shape out in terms of the kind of jobs claims data that is coming out, and the other macro data all across the globe. Remember, the interest rate hike is something that the markets are clearly keenly keeping an eye out on. Bank of England is already hinting at a second interest rate hike, and remember, on the 9th of February, even the RBI will be meeting to declare its the policy also. And there is a wide expectation that this time around, following the trend across the globe, even the RBI might move ahead to reverse the lower interest rates as well. We'll keep a keen eye on to that. The banking space will be clearly a watch out for you, because tomorrow we do see SBI, the largest bank in India, to come out with its earnings, and that will also give a hint of as to how the banks will perform from here on as well. Well, that's as far as the market opening action is concerned. Oh yes, and there's another important fact that I missed out. I apologize for that, and that's in the primary market space. You do have an opportunity to begin investing. Vedant Passions IPO will be opening today for subscriptions, February 4th to February 8th, and the issue price is 824 to 866 rupees per equity share. That's the kind of, you will be able to bid for a minimum lot of 17 odd shares right here. It's a complete OFS, 3100 crore rupees of this IPO will be a complete OFS, will be giving an exit route to some of the shareholders. The brokerage houses are quite mixed at this point in time. Most of them have not really rated this IPO, while some are giving a thumbs up to the strong brand and the franchise as well, and the global vision of expansion. The others are really concerned about the valuation front, and on the other hand, the kind of niche category and only a celebratory wear kind of a segment that the company really concentrates in. We'll have to keep you posted with everything that's going around and buzzing around Vedant Fashions. We'll keep you updated with how the different categories of the IPO are getting filled up, who's investing there, all the trends and everything. So do stay tuned on to Business Today. Don't forget to subscribe to our YouTube channel so that we can keep you updated with everything that's buzzing on D Street and in the world of business. Thanks a lot for tuning in.